Welcome to the B.F. Anderson Technical Report for October the 1st. Warren Buffett backs largest U.S. solar project approved as nation's renewable use on track to pass coal. In other words, solar is growing. It seems to be something of interest for Warren Buffett. It's a very major project in Nevada called Gemini. So it's just something to be aware of, and especially with the charts are telling you something here too. This is a ETF called the Invesco Solar. TAN is the symbol. Look at the chart. I mean, you're looking at an absolute parabolic move here. So something's happening in solar. So we could say, okay, it's politics. I don't think it's politics. I think it has more to do with Battery Day with Tesla, because as battery technology improves, that should help solar as well. Now, here's another ETF called the First Trust Clean Edge Green Energy Index. So again, you could be political and say a Green New Deal, or you could say something is happening here with battery technology that's causing these types of securities to become in big demand. So an indicator that I brought on recently, and I was actually using a histogram to show the graph, but I've gone to a line chart because I think it makes a clear point. This is the number of new highs on the Nasdaq. As you can see, the new highs peaked around August the 9th, but the market didn't peak till around September the 1st. So a little bit of a warning was the fact that we got a high of new highs, then we got a lower number, and then it started to deteriorate. Now, I would also say, after a major sell-off like this, the fact that it has turned up, I think is somewhat of a positive. I think it's a good indicator. We'll keep an eye on it. Nasdaq continues to go up this moving average. We were moving quite along, then we came in with a correction, broke down below the lower moving average, consolidated. Now we're trying to work our way back up. So it looks positive. So let's see what happens. We're still in a bull market. I believe we have just dealt with a correction in the market to work off the excess enthusiasm, the greed. So here you have on a weekly basis, the 35-week continues to be in an uptrend. This is very positive. This indicates on a weekly basis, which is intermediate term, that we are in a bull market. Here we have a longer term indicator. Now I'm going to talk a little bit more about this indicator, and I'm going to show you some examples later in the video. Basically what we're saying here is that the beauty of these monthly charts is, because they're so steady, you can get very reliable indications of long-term activity. So this is the S&P 500. It is in an uptrend. We're on a golden cross, and in the most recent month actually hit a new high. But this would say the S&P 500 is in a bull market. Same for the Nasdaq. It's basically saying the Nasdaq is in a bull market because you're on a golden cross. We'll talk more. Here's China, same concept. Now China, was the first one to have problems from the coronavirus, but also the trade wars, et cetera, et cetera, et cetera. And we had a negative situation where we got a death cross, which then resolved itself with consolidation, is now in a golden cross. So you should look at China. It's a controversial investment, but you have to realize China is vastly approaching to be the #1 economy in the world, and I just don't think we can afford to ignore it. Here we have the aggression index, where I'm comparing the Nasdaq to consumer staples. On a daily basis, you can see we rallied, we made a new high, we came down, made a low. Now we're making a higher high from this high, higher low, higher high, higher low, higher high. So this is looking constructive. This is it on a weekly basis. The indicator is that we have a 40-week moving average. As long as that moving average stays in an uptrend and the actual ratio stays, the aggression index stays above that moving average, we are on a buy signal and in a bullish posture. These are just some economic indicators that we look at. This is interest rates. As you can see, nothing is happening with interest rates. This is really important because the Federal Reserve has basically come out and said, we're not worried about inflation. Even if it gets up to 2%, we're not worried about it. We're not going to raise interest rates. So it basically means somewhat free money to a lot of people buying houses and cars and so forth. capital is available and it's not expensive. So interest rates staying low is very important. In other words, don't fight the Fed. Now, this is oil. We're seeing that oil continues to be in a downtrend. The 200-day is in a downtrend. Oil looks weak. These are the financials. These are the banks and the insurance companies. Again, downtrending 200-day moving average. Index is below the moving average. Looks low. Doesn't look positive. Here we have the S&P 500 basically on a 25 and 50-day moving average. We can see the correction. We consolidated, then we pulled back again, consolidate. Now, I mean, we don't know, is this consolidation going to result in a move up here, or is this consolidation going to move here? We don't know. But right now, as you take it today, it is looking somewhat constructive. The fact that the S&P 500 has held above the 200-day moving average is also a positive. Number of new lows, we had a pop-up during the correction of new lows of 70 one day, but since then they've settled down. It's really not an issue at this point. Sentiment continues to be in greed. Now remember, this is a 10-day moving average of the put-call ratio. And remember, as institutions become greedy, they buy calls. When they become fearful, they buy puts. Right now, they're buying calls, and they're a little too optimistic. This is not as negative as it was, improved somewhat, but I really would kind of like to see it go ahead and get up into this normal zone. Volatility index, which is the VIX, still elevated, not terribly, however, is improving and in somewhat of a positive mode. So volatility is low. So we're in basically a sideways market now with low volatility. We'll just have to see how this unfolds. Now, I wanted to show you a graph here of a stock called BP Amoco. This is British Petroleum. We went negative on the oil stocks in June, around June, July of 2014. Now, you can see here that the price of oil, now I've got the price of oil here, peaked, has continued to be in a downtrend all this time. Well, this is where the 10-20, the monthly moving average comes into play, where it teaches you something. Okay, we got a death cross here, came way down, then we got a golden cross. But if you keep things contextual, which means take it in context to other things, the price of oil continues to be in a downtrend. So even though you got a golden cross here, the fact that oil was in a downtrend would have caused me to be very cautious. Now you can see we then got another death cross and coming way down. So that's BP Amoco. This is Exxon. Pretty much the same story. You got the death cross, price of oil in a downtrend. Yeah, we got the golden cross, kind of weak. And you notice here with Exxon, now this is just the moving averages. I took the price of the stock off. This is just the 10-month compared to the 20-month moving average. So you can see here that we made a lower high here and then rolled over just like BP. Price of oil continues to be in a downtrend. This is a group to definitely stay away from at this time. Okay, top 5, Digital Turbine software. Stock's been acting really well in a nice uptrend. Looks positive. This is Gap. Now, it's interesting here. We're seeing some apparel retailers. Haven't seen them in a while. But you can see the stock gapped up here, consolidated, a little bit of a downtrend. Now it's starting to turn up a little bit here. And L Brands, which is another retail apparel. You can see here it's actually breaking out to the upside. So it looks like some retail companies are starting to show some life. Penn National Gaming, these gaming stocks continue to be strong along with DraftKings. You can see here it broke down below the 10-day moving average. However, quickly rallied right back again. Good volume came in. It seems like there's some institutional buying going on here. Here's Tupperware. This was a stock that was really looking good. I'm sure it's going to fall off our list by next week, but you can see it broke down. Never did get really excited about it, but it was looking very positive for a good while. So that's basically it. If you have any questions, please give me a call. Thank you.